Good morning, I'm Johanna Botta from StoneX with your market update. European stock markets slipped into the red on Friday after a brief rally as concerns about an ongoing trade war between the U.S. and China continued to weigh on investor sentiment. With volatility marking the end of a turbulent week, major indices all posted losses. With me today is Senior Market Analyst at StoneX, Fiona Cincotta. Fiona, thank you for being with us today.
Thank you. Thank you for having me.
So, how are the markets reacting to the latest developments?
So we've had an announcement from China that they're increasing their trade tariff on U.S. imports to 125%. This comes obviously after a roller coaster ride of announcements, developments, withdrawals from the Trump administration as well. But overall, there's fears that the trade war is escalating between the U.S. and China. As a result, we have seen some weakness in European indices. Interestingly, U.S. futures briefly dipped lower, but they look like they're trying to recover now. But we're seeing a lot of this played out in the US dollar today. The US dollar, well, it has in fact fallen across the week, but it is trading down today significantly. It's trading at levels last seen in April 2022. And that's interesting because we've seen, obviously weakness in US equity markets over, the past 10 days or so, about the past few weeks. But we've also seen this weakness in the US dollar, and there has been weakness in US treasuries as well. So, this sell everything US, it sort of suggests that investors are looking to reallocate away from the US. And that's just, again, a concern of the recession or fears regarding a recession that could be coming with these announcements.
And we have earnings seasons coming today. We have JP Morgan, Morgan Stanley, Wells Fargo, all giving us some insight. What should investors be looking out for in these reports?
Yes, so the start of earnings season, interestingly, because it feels like it might be a little bit overshadowed by the trade discussions and trade announcements that we're getting. But I think, as far as Q1 and results are concerned, they're probably going to be okay, but that's not going to be the focus because they almost feel as if they're a little bit stale now, given the dramatic shift that we've had in the outlook for the US. I'll be watching out for bad loan provisions provided by these banks, because that would give us some clues over, what they see as the outlook for the loans going forward. And also that will give us a clue as to how they sort of consider the recession to be, or whether we are looking towards a recession. I think trading revenues will probably be pretty good in Q1, given the amount of volatility we've seen. But I think, as I said, the focus is going to be very much on the outlook, what these management teams have to say about the macroeconomic outlook going forward.
Do you think that Jamie Dimon is going to use this opportunity to reiterate his concerns about economic risks? And how might this impact market outlook?
Yes, Jamie Dimon has definitely been quite vocal this week as far as trade tariffs are concerned and what that might mean for the US economy. And so, yes, this could well be another opportunity for him to warn over what he considers to be a deteriorating outlook for the US economy. And I do think, investors are going to be listening very closely to what these banks do say. They're obviously very economically sensitive sector. So we could potentially see them coming under pressure if we hear deteriorating outlooks.
And it won't just be investors listening, but correct me if I'm wrong, last time Donald Trump, the president, seemed to be listening to Jamie Dimon and what he thought of the market. And it did change some things in how the president proceeded.
Yes, obviously this is a very well-respected figure on Wall Street and across America, and clearly in the White House the Trump administration as well. So yes, it's not just going to be the markets. We are going to be, seeing if Trump does make any adjustments on the back of these announcements that we hear and outlooks from Jamie Dimon particularly. But there's so much uncertainty. Trump does seem to be flipping a switch, changing his mind, and creating and holding on to that uncertainty that's being reflected in the markets with the roller coaster ride that we've seen this week.
So where do we go from here? Because how high can the tariffs go?
Yeah, effectively, it's almost as if the US has frozen out Chinese trade, given how high tariffs are. Any numbers above here are just numbers now. But the same could be said with China as well. I think the market's really going to want to see a deal being done, because if there isn't, then obviously the outlook is deteriorating quite rapidly. So that's what the market's going to be waiting for. Will they get that? I don't know. It just feels like it's a coin toss as far as Trump is concerned at the moment.
Well, thank you so much, Fiona. And thank you for watching. For more information and content, please like and subscribe to our channel.